We are live. It is almost an hour early, but we're doing this to accommodate an amazing guest, and we really wanted to make things happen with this guy. We have him on every so often because it's time for an update, I think. Today we have Jivan Sanghera, very familiar face here, super down-to-earth guy, amazing advice. He's got over 20 years experience in the mortgage industry and has helped more than 4,000 families. Holy cow.
It's
That's
a lot of
amazing.
people, bro. It's a lot of French
That's a
fries.
lot of people. That's incredible. So he's also a big part of our Burlington community. He supports local causes, sponsoring events, and helping lead some of the most important people, the Burlington dads in Burlington. So that's pretty fun too. Jivan, thanks for coming on again.
Absolutely, Justin. It's a blessing and a pleasure to be here, bro.
Uh,
Thank you for that kind intro as well. It's community service and Burlington, being the great city that it is, it isn't possible without that community service. So as we all move into the age group of running this place, I think it's really important for us to contribute. And the Burlington Dads, for me, is a passion that you very well know I talk about regularly as to how proud I am of this group and what we've been able to achieve by the one thing about the Burlington Dads is that what we've achieved is all just by momentum, like planning of momentum. And a lot of times we're asked, why now? And many times it's because we weren't asked previous to that, right? When we raised money or started the toy drive, and the toy drive this year also divided off into an instant food drive that raised almost 2,000 pounds in food in 4 or 5 days. And it's just the work doesn't feel like work. It's such a wonderful experience. We did our barbecue this year. We were at Central Park, right smack dab in the middle of Burlington, bro. And still, you get a little choked up thinking just the amount of people we were able to meet that day. And, people are thanking you for a hot dog, but you're thanking them for the opportunity,
mm,
right? Like, so blessed, bro. Like, people in the city don't realize how blessed and lucky we are to be here. And, and there's plenty of people suffering hardship too. And to them, I wish them all of God's blessings. But like, just for the people that live here, don't just take advantage of the address, right? Like, don't take advantage of a lower car insurance, right? Like, get out and get involved and meet the wonderful people in this community. A lot of people will say, oh, I don't have friends, or, I'm newer here and how can I participate? Well, this is a Facebook Live. So if you're a dad and you're from Burlington, then what are you waiting for, bro? Like, it's join the Burlington Dads and make some new friends and do some good stuff while you're at it.
and it's super like approachable too. Like the guys in the group as a whole. I mean, there's a lot of guys in the group now,
Yeah,
and
more than
it's as
7,000.
active or as inactive as you want to be. You want to pop in and help for one event or be a part of one event, do it. You want to be just sitting on the sidelines and watching all the good that we do and just knowing that there's a community there, do that too. I mean, there's opportunity for everyone and every, level of wanting to participate. Not that I'm selling the Burlington
Bro, can
Nats.
I tell
Love it.
you?
It's a beautiful organization.
Um,
So
Can I tell you, we have a weekly participation rate of almost 90%. Almost 90% of members at one point or another during the week check in. And,
it's
that
amazing.
is so awesome, right? It doesn't mean that everybody's post gets seen. Like, we don't allow for political posts. There's, not a lot of bikinis floating around the space, but there's plenty of other places on the internet for that. This is more just about rowing in the same direction and help where help is needed. So, but that sort of touch rate, that sort of check-in rate for what's a quote unquote Facebook group, yeah, that's unmatched. And even to see the stuff that's spinning off from it, right? It's so wonderful. It's so
Yeah.
wonderful.
No, it's
And
great.
again, altruistically, it's an opportunity to kind of balance the karma cup. Not that we're doing bad things, but it feels great to get involved. So I encourage everybody to do so.
I just think that it's about time that it's hard to say this a little bit to some people, but we get to be here. So let's have
I'm
some
so
fun with it.
Yeah,
I mean, there
absolutely.
are some people that no longer get to be here and their lives were cut too short or whatever. And
Mm.
we're still here. So while we're here, why not just be nice to other people? And this is
Dude,
one of the ways you can do it.
The one thing, and you've heard me say this, and you've heard me say it to my children, is there's no use in winning by yourself.
Nope.
There's just
Agreed.
no, it's not a win. Like, yeah, you're the, way to give yourself a pat on the back for that one, bud. That's you're the only one clapping.
Yeah. Yeah.
Um,
Yeah.
you're much better to participate in community.
Agreed. So that said, what I think we're looking for today is just to talk a little bit about what's happening out there in the real estate world. I know we don't often do real estate stuff on this little show. We try to, talk about other interesting things, but when Jivan comes on, there's always some good stuff that comes out of the conversation, and I think it's time to sort of bring that up again, and especially given, I think a week or so ago, we just had another Bank of Canada announcement that was basically a non-announcement. It was an announcement of nothing. So
The last couple have been announcements of
yeah,
nothing, bro.
yeah,
But it's not that it's nothing.
right.
You know, the Canadian economy is in a technical recession. Anybody denying that doesn't know how to read a chart. Um, you'll find people talking about statistics that fit the narrative of what they're trying to explain, but there's a couple things that are very, very transparent. One is that we are in a recession, technical or otherwise. Canadian manufacturing output is down. The one thing that's very interesting is the inflation rate did drop from 3.2 to 2.8. That was in line with what happened with oil last month.
Mhm.
Now, I don't know what we should
I know.
call. I
What
don't know
just
what we
happened
should
this
call the
week?
the president of the United States.
Yes.
Whatever, however you refer to that gentleman, has renewed his hostilities in Iran, and that Strait of Hormuz stuff is all rearing its head again. So what's happening with that is quite simply the price of gas is going up. And with the price of gas, much like we see that every day in our lives, with the price of gas going up, the cost of goods is going to go up. So that's going to be some more upwards pressure on inflation. Now, the one good thing about the Bank of Canada in their last announcement as well is they are trying to keep, this sort of fuel spike out of their rate decisions. But at the end of the day, if a spike continues, that might unfortunately require them to increase prime by a quarter point, but recognize that it would be really based around the shock of the oil of an oil spike. So as that would hopefully subside, you would likely get relief from that. But here's the one thing I know. If you were talking about our Bank of Canada prime and interest rates right now, I'd like to welcome you to the flat plains of Saskatchewan and Manitoba. This is a very predictable market right now. A very, very predictable market. Not one person that I read or refer to expected any sort of change in prime for the last meeting. I heard a couple people talking to the previous one about a potential increase, which I saw to be unlikely, just based on the amount of negative economic news that is actually prevalent in Canada. Like, the headlines are great, and what Mark Carney's trying to do internationally is great, but signing defense deals, signing those things that are going to lead to jobs are not boots on the ground. So those things are still a couple years away from actually providing employment and sort of financial fiscal benefit to Canadians. So because of that, again, in a recession, what's actually there is downwards pressure on prime, but our friends to the south and their adventures abroad are leading to an artificial oil spike. And because of that, we're all paying. And let's not even bring in renewed tariffs and an upcoming, USMCA deal that is expiring, and we're having trouble negotiating that with our neighbors to the south. That could really affect manufacturing. There's been news recently as well that many manufacturers are looking at setting up satellite operations in the states because of the uncertainty associated with trade down there, and that sucks. That sucks because Canadians we're traditionally not a huge manufacturing economy, but manufacturing jobs pay good money. Like, these are jobs that people have been able to build the foundation of a real life on. My dad worked for Mack Trucks up until 1993. And that was a job that allowed him to get his kids into university and make sure we were educated and live. The people that live across the street from me in Burlington, husband worked at Ford, wife worked at another factory, and they were able to afford a nice home and, raise their children to be educated and happy and healthy. That's all in question right now. And that sucks. Like it really sucks because, Canadians work hard enough. We get taxed locally, municipally, and federally, and provincially to the nth degree. And quite honestly, take a look around, guys. Like this is not a political stump campaign, but we are not getting value for our money. And as the bureaucracy continues, our costs as Canadians increase. And again, it's interest rates are great, uh, but everybody lives in an after-tax life. So, you make your 100 grand, you make whatever you make. You're not doing your debts off $100,000. You're doing them off between 55 and $60,000, which is criminal. But that again, this is not a campaign speech for me. The point is that with those factors in play, you are looking at what I would consider to be a level interest rate market where you will see 5-year rates hover right and around the 3.5 to 4.5% mark for the next extended period of time. And when I mean extended period of time, I'm reasonably saying, 6 to 12 months. But hey, if our friends down south can stop whatever they're participating in or whatever that's actually called, then oil prices may retreat, and with the retreat of oil prices, you would see impetus for the Bank of Canada to reduce prime. It's just I don't see an end to that. I'm not sure if you do.
No,
That's
I mean, listen, hostilities have gotten way worse in the last few days, just
yeah,
alone. I mean, there are three opportunities to get oil out of that area: the Strait of Hormuz, the Bab el Mandeb Strait, and then the Suez Canal. The first two are closed now, completely both. Like at one point, just the Strait of Hormuz, now the other one. And the Suez Canal doesn't have enough depth to have a lot of these full ships come through, quite frankly. So it's too shallow. So this could be a pretty serious one this time. I mean, I
yeah.
know they've been kind of flirting with these numbers and up and down recently. So, it just doesn't seem like there is an end in sight. And I don't know if it's an ego thing or what, but, this just seems to be, barking up a tree that is never going to ever get, release anything from it. So,
The one thing that I would say is very recently you saw Doug Ford in Alberta with Danielle Smith
yes.
talking about the pipeline to Sarnia,
Right. Yes. Yeah. Yeah.
where ta da 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 we may refine oil. Imagine that. We refine the stuff that we take out of the ground and then we decide where it will be sold. And when I say we, I'm not a shareholder. I mean, as Canadians,
Mhm.
our export of natural resources, the exploitation of our natural resources by our neighbors to the south, is borderline comical or criminal. Even now, like what they're doing with the tariffs, the premier of British Columbia just came out yesterday that said, fine, you want to tariff us, fine, but it doesn't mean you get to come take our lithium and take our cobalt and, come get the nickel that you need for all of that stuff at the rates that you guys want to pay, but then, you know, give it right back to us with tariffs on stuff where Canadians are employed. That's the thing is
Mm,
that they are literally functionally trying to destroy our manufacturing base. And it's completely illogical considering how big a trading partner we are with them.
mm.
Um, but the term logic and this sort of political cycle don't necessarily coincide. So
No.
this really sounds a lot like a politics
It
show. I
does. It
didn't
does.
mean
So
to,
so
I
so
didn't
let
mean
me
to
just,
do
as the
that. Yeah.
host, let me
Yes.
shift the
Yeah.
narrative.
Yeah. Let's
so
just bring our ship into alignment here.
yeah, yeah. So circling back to interest rates and understanding that they're hovering. I mean, obviously, with the Bank of Canada rate staying level, the variable rate's going to like just not really move anywhere, and then the other rate, the fixed mortgage rates, will tend to work off of the markets as a whole and the bond yields and so on and so forth. We've had these discussions over and over again, and as you've said, they'll hold for the next 12 months, which in and of itself is good news. And what's funny about what I'm seeing out in the actual real estate market right now is that, we've got a pretty reasonable amount of listings out there. I wouldn't suggest that we have too many listings. We're in the 600 listing range for the city of Burlington, which is, fairly average for this time of year. I think the big problem we still have is we have people that aren't really connecting with the idea that the prices have come down significantly. Like they're talking numbers in the range of 20%, which is way worse than the 90s when they came down 9 to 12% in the 90s, which was the last sort of major real estate recession that we had. And not including the small blips in between, obviously, which had some small little impacts, but the 90s was like a multi-year, like, decline.
Completely flat market. Yeah.
Yeah. And so, and I, obviously I was little back then, but my mom was in it. So by proxy lived that because I would have, Karen Paul coming home and bitching and moaning about stuff going, and my dad too. Right. So, but that being said, right now, what's interesting about it is, you know, people that are priced right and selling, houses that are selling on average in 45 days. The houses that are not selling are sitting on the market for an average of 85 days.
On a
So, I
90-day
mean,
listing.
my point is that it always comes down to price.
Yeah.
And yet people don't seem to kind of connect on that all the time. And they have their reasons why. For example, I paid this for this house, or this is my renovation cost. And these are the things. None of that matters in this market right now, right? We just have to go by the statistics of what's selling and what buyers see value in. Because the second these sellers flip over to buyers, they immediately flip the switch and they go, oh, well, we're going to offer way lower. And so the disconnect is somewhat mind boggling. And I love to call it out because I just want to make sure that people understand that the one major thing we're dealing with is price all the time. And it
Well,
almost
so
doesn't matter what market we're in, but it's the most important right now.
for sure. So, well, now the good thing is that with a slight reduction in the amount of listings available and a little bit of a lift in demand, while we may not get the appreciation that home sellers are hoping
Mm,
for, we may not get the depreciation that
right.
they're fearing either. Right.
Agreed.
So, much like you said, prices down 20%. I know that on average, in my neighborhood, and I won't get into what neighborhood it is, like when I'm comparing at peak, we're down 30%.
Mm-hmm.
Um, and that's fine for me because I bought before peak, but those people that bought in peak, one of the main things that is happening right now, even at the renewals, is that when we are shopping renewals for customers, if that lender is not agreeing with the value, or if we are, trying to refinance at renewal, instead of, sorry about that, my little calendar popped up there. But if we're trying to refinance at renewal, property value comes into question.
Mm,
And say they were 20% down or 10% down at that purchase of 2021, 2022, we're now in a situation where their property is not worth what they paid for it. Their property might be worth less than what their mortgage is. And, Canada doesn't have the leave the keys on the table and set it and forget it sort of system that would allow people to walk away from that. So, the people holding the bag in Canada are truly the homeowners.
mm-hmm.
Uh, so what I say as advice to my customers that are participating in the purchasing process is that they should really consider selling before they buy. In this market especially, or even if they're making a purchase or if they have that urgency. And I know it's not the easiest thing to achieve, but a sale of property condition in their purchase and sale agreement for the next property is very important. Just the certainty, like, Justin, what happened to me when I was selling my house back in
Mm-hmm.
2018, and how we didn't get a firm offer until 11 days prior to our purchase closing date. And that was in a level market.
Mm,
um that was in a level market. So in this market, like you said, you have people that are trying to gain an advantage by being aggressive in their offers, like negatively aggressive,
mm,
unlike before where it was positively aggressive and they were going over ask. You're seeing those properties, like you said, that are unrealistic in their asking price sit.
mm-hmm.
And unfortunately, sometimes they're sitting because of circumstance, and sometimes they're sitting because people are stubborn.
Mm-hmm.
The one thing is that, for people that are getting, market evaluations done, really kind of look at the average of what these professionals are telling you, because when you decide to go with that one outlier that, has a value at 100 or 150K higher than what everybody else has told you, as much as what you would like to believe is fact, should be fact, it's very unlikely. Uh,
Mm,
it's very likely that you will list at that price and you will be one of those 85 dayers. And then when you start having to do price reductions, where does it end?
right.
Where does it end? Versus, starting at the right price, like you said, you're in and out in 45 days, 6 weeks, which is a very normal time period for, historically speaking, 30 to 45 days for a listing and sale period is not a long time. But 85 days, and then terminations are taking place, and then people are saying, oh, I'll come back in the spring market, or in the fall market, expecting to have made money, and it may in fact cost them money.
Hmm.
And
Hmm.
so
Yeah,
it's very hard. It's very hard to watch for people.
we were talking about this last night. My wife and I, Andrea and I, were talking about the idea that, like, people that are looking to make quick money on houses and flip them right now are just having a really hard time because there's no value. The prices of the materials, for example, have gone up, because it's fuel price goes up and moving them around, and all that, what we just talked about. And then adding to that, the prices of the houses have gone down. And so, anybody that's been doing building or renovating over the last 2 or 3 years, that's put that time in, they're not necessarily going to see that value out. But the question I always ask people, depending on their situation, of course, I mean, equity is equity. And if you have it, great. And if you don't, it is what it is. But I tend to look at people and I go, well, I appreciate that you need or want X amount to get out of this house because of your situation you're in. But what could you be doing with the money if we were able to sell it for a little bit less now and we moved on? Right? That's a big question. I'll give you a really great example. My cousin sold his house. He was living in an apartment in Stony Creek and saw the writing on the wall that there's like 1 million apartments for sale and 1 million more apartments being built now down there as well. And he's like, I'm just not going to be able to raise a family here, for one, because he's got a wonderful girlfriend that I'm sure will eventually do that. And two, I just don't think that the appreciative value of this property is going to go up and make me money over the long term. He paid 420 for it. We eventually sold it
20.
for him for 380. Okay. So he bought it in 2019, 2020 for 420. We got him 380 for it. And he leveraged that into a $600,000 house in St. George, Ontario, where he's now living in a detached house with a half-acre property for double the money. Granted, it's not on the lake, so I'll give him that. But at the end of the day, that house will actually make him more money long term
Oh,
with the
definitely.
situation he's in than the stupid apartment that he had down in Stony Creek, with all due respect to the people that have just bought apartments down there. And I'm not saying it was a bad investment, just that from his point of view, he looked at it like, if I'm going to do something with my life here, this is the move that I need to make. And before I wait for this to go down even further, I'm going to take advantage of the opportunity right now, take this offer and move on and buy this $600,000 house up here. And for him, that was the right move. And I think that's part of the conversation you should be having in your brain. You're stuck with a house. It's been 6 months. It's sitting on the market. What do I do now? Well, you know what? Buyers aren't seeing value. There's no other reason why your house isn't selling. This is not seeing value for what the price you're listed at.
For
So
sure.
like work on the lower pricing, try to figure out where that value lies, and get a deal done and move on with your life. Take the L for now. I get it.
Carry the
Like
L for sure.
at the kid, the kids say it, take the L and move on. And now let's leverage into some wins down the road. Right.
Well, it's not
That's
just
what
that,
I'm looking
Justin.
for.
Like you said, right? So, for people to participate in the same market is fine. It's
Mm,
when you buy in one and sell in another.
yeah.
So, for exactly as you described, if somebody wants their house to move, it doesn't take long to understand what the true market value is. Speak to three realtors. The average is the market value. Again, and like you said, as a matter of circumstance, people are automatically leaning to that individual that is saying, like, I will get you the most. But realistically speaking, is that person producing that result for you, or are they putting you in a position of false hope?
Mm,
And now you're twice as disappointed versus dealing with somebody that's being direct, and it's the same way that when somebody calls us and they have a house that's worth $2 million and say, oh, I saw a rate of prime minus 90 advertised. And it's like, well, how do I explain to you that that applies to purchases, or homes at a value of under $1 million that are either insured or are less than 65% loan to value. And they go, oh, but that's a rate I saw on this website. And they're encouraged to give them a call anyways. Funny story. If you go to circlemortgage.ca, guess what you don't find is interest
Rates.
rates. Interest rates. Imagine that, because why would I want to piss you off before I even speak to you?
Mhm.
Right. And the amount of people that are just being baited and switched to the point where it's actually a strategy. And
Mhm.
it's like, why? Why? Like, one thing I've been talking to people about is that, for people that are in a good spot right now, to consider looking at using some equity to make a purchase of an investment property.
Mhm.
I came up with this cheesy line of, your mortgage renewal is an intersection in life.
Mm.
Stop at the light and look both ways, right? Like, okay, yeah, we can keep proceeding and we can stay on this path of paying this mortgage down in this linear amortization, or we can cut right and take some money out and invest it in the market, or we can cut left and take some money out and invest it in other real estate.
Mm.
Just because this is a really crappy time to sell doesn't mean it's a crappy time to buy.
Mhm.
And that's what I try and remind people of, right? Like, don't end up with one of these coulda, woulda, shoulda situations. If you see scenarios where you can pounce on the market, you can put yourself in a position to take advantage of a power of sale or something like that, then put yourself in that position, even if it's just getting a line of credit to make sure you have the down payment in case you decide to strike.
Sure.
But more often than not, more than 6 times out of 10, Canadians are just taking that document they receive in the mail, not really, comparing it to anything, just assuming that their lovely relationship with their bank should continue. Sign, off it goes. I'm not saying that's a bad strategy. In certain situations, it's the right one. But at least take the time to look both ways, because, the opportunities are out there for real.
Remind me of the renewal opportunity where now you can renew with another lender, but you don't have to qualify at the higher rate.
That's right.
Explain
Yes,
that to
yeah,
me.
exactly. So traditionally, like, you have to qualify on the contract rate plus 2%, or 5.25%, whatever's higher. With a switch that does not involve any new money, you can technically qualify based on just the contract rate. So if the contract rate is 4.2%, you can qualify based on that 4.2 instead of 6.2. They've done that to make sure that people still have a little bit more choice
Yeah.
when it comes to having options at switch time at renewal.
Mhm. Well, at that point, having to provide all new stuff and qualify again, it becomes a pain in and of itself, right? So to
Debatably, right? So again, it depends on your goal. You
true.
know, everything has a cost to it, right? So
Fair.
in this, the cost is the headache of requiring the documents and stuff like that. But what is truly about a 60-minute task could save you 10 grand over 5
There you
years.
go. There you
So
go.
I'd encourage you to take the 60 minutes, take that hour. You don't even need an hour, quite honestly. You need a 5-minute conversation, a 10-minute conversation with us where, hey, jump on a call. This is what I'm at. This is where I'm at. This is what I owe. This is what my lender is offering me. And in under 10 minutes, I can tell you if that's a good way to just keep going, or if you should investigate, other opportunities, whether they're with us or not. Like, more
Yeah.
often than not, they are with us. But if not, that's okay too. Like, we're happy to offer the advice and just help Canadians make sure they're not getting ripped off.
Yeah. And so the second half of the year as we come through, I think what we're in right now, in my opinion, is a little bit of a lull, which is that a kind of end of July, early August lull where people are just taking their last little vacations and
For
time
sure.
off. And I think September is going to come back with a little bit of a vengeance. I don't anticipate, massive price increases, but I think you're going to see an increase probably in volume of listings out there, an increase in deals being done for at least a month or two, because with more listings come more opportunity to buy. And just generally, I think we see a healthy end to the year. But the other thing I would always suggest is that Burlington as a whole, I mean, there was a new article that just came out that said that they were the number one safest city in North America, or number two
Number
safest city,
two, I think they're number
something
two
like
in
that. And
Canada.
then there was in Ontario, they were like in the top three for the cleanest cities in Ontario or something. I can't remember, but it was like, we always get those little articles that come out. And so people want to be here. And I also feel like, this is a fairly recession proof city as a whole. Like, and not recession resistant completely, but has this like ability to hold its value because of what Burlington offers as a whole. I think the city in and of itself is really well diversified. For like, I keep hearing of these. I'm like, oh, this business is run out of Burlington. Really? They make those here in Burlington? Yeah. Like I can't give you an example off the top of my head, but every now and then I hear that, and I'm like, I didn't know that. That's a worldwide product. Like crazy. So and so I think that there's a lot of interesting dynamics here that create a really cool little city that allow us to live very comfortably, very cleanly. And I just think it's a really good opportunity for people to buy in. And one of the things I'm seeing as well is I think sneakily, kind of quietly on the sidelines, you're seeing investors just pick off little properties here and there and pick them up as they go along, right? I think it's
Oh,
something that's
it's
been happening.
even shoebox condos, right? Like there's
Yeah.
people buying multiple units and signing an NDA to not talk about their price,
Yeah.
which is kind of weird because land registry would tell you what it is anyways. But
Mm.
um, so those opportunities are there for that sort of institutional investor. But exactly, right? Coulda, woulda, shoulda. People should definitely be considering looking at those investment properties right now because just like the price of regular real estate, the price of investment real estate has come down as well. And if you can, and now don't get me wrong, rents have come down as well.
Mhm.
As a residential landlord myself, I can tell you that it's harder and harder for people that are renting as well to meet all of their obligations and still have a life.
Mhm.
It's a really crazy market, and I think that some people are doing very well. Some people are doing very, very well, but there's a lot of people that are definitely struggling, homeowners and renters alike. But the one thing I wanted to say is that again, for setting that table for what's next for people, when we're doing switches, so the switch itself, so we can get them into a new mortgage at no
Mhm.
cost to them, they would just be paying for the legal fee associated with the registration of their line of credit. So it's
Yeah.
not a huge, financial investment for them to have this line of credit registered. But the point is it puts them in a position where they are able to act, provided that the opportunity that they want is ahead of them. The reason I'm mentioning this again is, you are a realtor. I am a mortgage broker. I believe a lot of people watching today are wondering about what to do in this market. This is definitely a time to, if you have the equity and if you have the stability, let me remind you, the stability to be a landlord, you have to be able to deal with the ebbs and flows of being a landlord, which are, people that don't pay for months on end, repairs that you don't expect, city inspections that you don't expect that really
I feel like this is coming from personal experience. I
I
can
may
feel it
or may
coming.
not be in the middle of one right now. That was actually initiated by a deadbeat tenant.
Mhm.
Um, but all of that being said, still blessed, still blessed. So don't let me come across as woe is me.
No, no.
But no, the point is that it's a great time to look at the opportunities available. Um,
Well, and
many
don't be
people when
scared.
it,
Don't be scared by it, because here's the interesting part of it is like, you know, lots of people have made lots of money landlording,
yep,
right? Like it's just a fact, right? And I often hear that, like, when in groups of people, everyone people are talking, I don't want to do that. The pain in the ass of blah, 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 blah. I mean, at the end of the day, nothing ventured, nothing gained, right? And nothing comes without some sort of fight, right? Nothing good comes without some sort of fight. There's going to be problems. We have a client that has worked with Karen and I for years. We've rented out their property time and time and time and time again. And suddenly, one time after 7 or 8 years of renting, we have one tenant that comes in and really ruins everything. Didn't ruin anything, but just was a bad tenant. Some bad situations arose. 4 months later, the tenant leaves. We released it out to somebody else nice. It was a pain for 4 months. I get it. But for 8 years, this guy made a profit on these things every
yeah,
time.
and a leveraged profit,
Right.
right? So that's the one thing people have to remember is that if real estate only starts going back up by 4% a year, but you only put 120K down on a $600,000 investment,
Mm-hmm.
that 24K appreciation on your $120,000 investment is 20%,
Yeah, it's not bad.
right? So again, and that's only at a 4 or 5% appreciation. We
Right.
were we were rolling, at peak of 13,
Oh yeah.
21%. Like
Yeah.
it was gross. It was
It
unsustainable.
was not. Yeah, I agree.
It was completely unsustainable, and it was a frenzy. But the point is that a 4% annual appreciation on real estate is very, very nominal. It's
Mm,
very level. It's not hard to expect. So,
mhm.
yeah, I hope Canadians see the opportunity there for, again, for those that can afford it, and that is level. It's a level that they can
Of
achieve.
course, and with the that opportunity comes the idea that there are people coming out of their sale houses, selling their
Yeah,
homes, and looking for rental properties right now.
for
And
sure.
so, like there's opportunity everywhere, I think. And again, like, I don't care what business you're going to start, whether it's doing this or, starting a mortgage company or a real estate company or anything in between. There's pain in all of it. Right. And there's pain to get to where people like, successful folks in the industry like yourself, I guess myself, you could call me a bit successful. It wasn't just like, oh, we dropped our sign in the lawn and we went. It's going to be the same no matter what industry you're in. So whether you're deciding to landlord or not, that's cool. Do what you want to do, but just know that, you know, it's a good opportunity in any sense. In this market, there's a bigger opportunity because of the prices. I
Well,
think
you
that's,
could finally get to cash flowing,
yeah.
right?
Well,
Where
that's been
before
our
we were
problem
talking
for
about
how many
monthly
years?
burns. Yeah, we were
Yeah.
talking about monthly burns, and
Oh,
how
it's
long do you have to
crazy.
burn at what $100 per month
It's nuts. Yeah.
to kind of offset the appreciation where it still makes sense.
Yeah.
You're now in a situation where you may get yourself into a cash flowing duplex or a cash flowing triplex in
Mm-hmm.
cities like Hamilton, St. Catharines, Kitchener,
Yes.
Cambridge, London, places you can drive to and still be a landlord, and at the same time, take advantage of the market a little bit and get yourself into some cash flowing real estate.
What I'll ask you one last question before we end. What is the
Yeah,
one
sure.
question you get aside from what are your rates? Because I know that comes up all the time.
Yeah.
All the time. That's like a big question that you're answering right now for people.
A lot of people are more concerned about just what is the rates available for my situation, right? So a lot of times they're getting their initial offer from their bank and it's not very attractive.
Mm,
And we're helping them with that. I think people are wisening up to the fact that the banks maybe are not all about their relationship, or maybe are not all about offering them the best value. Do they compete with each other? Absolutely, but it's only when it's convenient for them. We've had lenders dig in their heels when their customers call them back to say, hey, what's the best variable you're going to give me? And they're like, well, 4.2%. And then they're calling me and they're like, what's the best variable you're going to give me? I'm like, 3.7 or 3.8%. And, and I say thank you in that situation because we're able to offer Canadians that value. But, the question I'm really getting is, should I? Like,
yeah.
should
I get it. I get it.
I?
Yeah.
Should I buy this? And my statement, as I said in those situations, I don't try and do a realtor's job. I don't envy what you guys do, much like you shouldn't envy what I do, because
No, I do not.
we we both have different headaches. But the point is that the should I question is answered very easily by listing, right? Get your evaluations, list it. If it sells,
Agreed.
go buy that next house. If it doesn't, unfortunately, the person that lost money in that situation is your realtor,
Mhm.
because they spent the money listing it, taking the pictures, advertising it, showing it. But even our realtor partners understand, because they're people. So when, somebody's coming back to them and saying, hey, should I, take pause, or what should we do here? They're giving them honest advice, right? Like, it's,
Mhm.
we can keep it listed if we're not looking to reduce the price right now, and kind of just let the market dictate it. But like you said, if somebody's actually interested in selling, bro, it's not hard to speak to a high volume realtor that will tell you what your place will really trade at. Or you can deal with the boutique realtor who might be willing to, and able to spend more time trying to manufacture demand for a property over and above its market price. But if that buyer is dealing with any realtor worth their salt, good
They're
luck.
just, yeah. Good
Yeah,
luck. Yeah,
like
exactly. And
it's
at the end of the day, let's look at it this way. I've always looked at it like, for one, I want to help people. And, I've dealt recently, as you know, with some very difficult situations.
all
And
day.
I've been over backwards to help these people. I'm still dealing with one where I'm probably going to have to pick up the client, bring them to the lawyer's office because they're not mobile. And so, like, that's how far I go to get this stuff to happen. And I think when it comes to what you've just said, I hear this all the time. Like, I hear realtors in my profession going, well, I don't want to list something if they're just trying to see what the market will. I get it at a certain number. Like, I get it if you're so far out of whack that you're just crazy and I don't think it's reasonable. But within a reasonable amount, just testing out the market isn't a huge imposition on me for a couple of reasons. And I'll pull back the curtain a little bit here. We get leads from these properties too, right? And our job ultimately is to convert those leads for more business for us. So, I mean, if I can look at your property as an opportunity to get a couple of leads from it, as well as help you through the process of selling your home, whether it sells or not, that's a win-win for everybody. So I spent 1,500, 2,000 bucks getting your property for sale. Now my job is to get another lead to be able to make that money back and or sell your property and make that money back.
Not just
Right?
that, you could nurture those people that came through the open house without a
Yes.
realtor to say, hey, at the 85th day, reality just checked in for these folks. There's 5
Let's
days
get
left
an
in the
offer.
listing.
Yeah. Yeah.
Do you want to throw something against the wall? And
Yeah.
again, depending on people's need. So that's why I'm saying is that if people decide to sell before they buy,
Mhm.
they can't be pressured into having to accept an offer that's below market. And you got to
Nope.
understand, like, on my street, a house just sold for an amount that doesn't make any of us neighbors happy. Um, and again, it was a situation where, they were just aggressively trying to get out, so they went low. And then, I think they went low expecting, much like that place that you and I offered on together on
On the
in Stony
lake.
Creek there,
Yeah.
right? I think they were expecting a lot more action than they
Right.
got, and ended up, quite honestly, they should have listed for 125K more than they sold for, and settled somewhere around that mark because it was market value. But, having artificially lowered that asking price like it's 2021 or something, and then, being faced with the reality of only receiving offers around that asking price, the realtor should have given their head a shake, because why would you use that strategy in today's market? But B, it brought the water line down for everybody.
Yep.
And that's what people need to understand. So and if you are that person that is all of a sudden made a purchase, has an impending date, might be new construction, right? I feel worst for the new construction people, because they bought in a different market.
Mm,
So they're
agreed.
forced to transact at a price that's probably 20% higher than it's worth. Oh, by the way, they still need an appraisal. Oh, by the way, the lender will only lend on the appraised value. And in closing, appraisals.
I wondered if this was going to come up.
Bro. So I'm going to keep it real for a second. The arbitrary format in which appraisals take place, and the leniency and the lack of enforcement of standardized rules, is something that has the potential to screw this market completely. And I say that based on the fact that I was doing a transaction in Kitchener. Okay, so this is my last grind my gears, and
Let's
I
do
know
it.
you've got to get going, and I'm sure people, if there's anybody still here, thanks. But the point is that new construction, deals closing at contract value,
Yeah.
registering at contract value, and then appraisers refusing to use those registrations as a market value assessment. Give me a goddamn break.
Mhm.
You need a written statement of value. You have registrations taking place at that specified value. And then you're telling me that they are not valid, and you're going to use a building from 5 kilometers away that's been up for 10 years to establish the value of a 2-bedroom, 1-bathroom condo in a brand new building in a completely different neighborhood? Bro, tell me you don't know how to do your goddamn job without doing your goddamn job. Furious.
I'm with you.
Furious, dude.
I'm with you.
Furious.
Well, lots of people hurt by this too. Lots of people hurt by this. This
You've
isn't.
got you've got banks doing blanket appraisals,
Mhm.
right? So what's that telling Canadians? Okay, well, if I go deal with Big Blue, I can get this based on my original contract. But if I want to exact my right of choice, oh, well, now I don't have the appraisal to support it. So now I've got to put an extra 15% down.
Mhm.
All because I'm choosing not to go with Big Blue,
Mhm.
because Big Blue in its, infinite wisdom, has figured out a way to close these transactions, saving their own exposure, because guess what Big Blue did? Big Blue financed the whole
Finance the whole,
goddamn
yeah,
project.
the whole project. Exactly.
Oh yeah, there's no conflict of interest there, right? So, anyways, that could be a whole other show, bro. I just,
I was just going to say, should we pause and come
dude.
back in another 30 minutes and start
Oh my
again?
gosh, dude. I'm just telling you, like it's unfair, dude. It's completely unfair. So if you don't deal with Big Blue, you're screwed.
Yeah, I agree. I understand completely. And you have relationships with other people, better rates, better everything, better whatever,
Yeah,
better product, and you can't do it because Big Blue's going to give you the number, And why do you think that house burned down 3 times in your, like, around the corner from us over here?
right.
So I mean, like, because this guy didn't want to close on the house because it was way different
Allegedly.
pricing today than what he paid.
Allegedly. Yeah,
And even
allegedly.
to this day, I've got a client in this Millcroft Plaza up here that still can't sell it because he paid 1.7 or something along those lines. The initial release was like 900,000.
That's what it's supposed to be. Remember, I wanted one too. And then when they were going live, you're like, yeah, Jivan, they're going for 1.5. I was like, in whose stratospheric mind
Nope.
does an 1,100 square foot 3-story townhome, you know, anyways, God
And
bless
and
them.
and let's add a layer to that. And I don't want to shit on them too much because I hopefully the builders owners don't see this, but the finishes in those places, unless people paid for the upgrades, which not many people did, you could have put those houses in the orchard and they would have fit in nicely inside, quite frankly. The
Wow.
look
Yeah.
of them, I get it, the outside, whatever. Inside, just
Well,
saying.
they are walking distance to Chick-fil-A, so they have that going for them. Um, but yeah, that's
And on that note,
for sure. Let's go grab a sandwich, bro.
dude, you're awesome. A bit of a diamond in the rough, I would say.
Oh
Just
yeah.
wanted to thank you again for coming on and appreciate every tidbit of advice that you give because, yeah, you're just wicked. So
No, bro, I
thanks for coming
appreciate you,
on.
man. I appreciate you. I appreciate your listeners and watchers, and thank you for their time. We're circlemortgage.ca. We're not hard to find, but
No, we're going to put all your links down below so people can click
oh yeah,
and
for sure.
whatever to
Well,
reach out. So we're all good.
absolutely. I know that if they're talking to you, they're calling me anyways.
They are. They are.
But no, thank you for your time. Thank you for the opportunity. God bless everybody watching,
All right.
and we'll talk again soon.
See ya.